Good morning, Stocktwits Nation.
AI jib jab. I didn't know you guys had this trick up your
Can we
sleeve.
talk about that for a second?
We've seen it. We saw a preview over the weekend just to send it our way, and we thought it was hilarious. But it's different things seeing it on the actual timeline. It was like, oh my god, this is so funny.
No, claps for Max and Ryan behind the scenes. Just awesome job.
I mean, so I feel like that's actually how I dance, so that's a little embarrassing. I love when the backup dancers come in. It's like a full thing. We hope you guys enjoyed it too. This is, of course, the Stocktwits Daily Rip Live. I'm Katie Parekh here, as always, with Shay Boloor and our friend Michael Parekh. We have a lot to discuss. We're waking up to a market on edge, or not. Market seems to be shrugging off some of the geopolitical drama that unfolded over the weekend. Of course, just going to caveat, this is a business show. We're going to focus on the business side of things. Of course, want to be empathetic to people who have family there, friends there, wishing the best for everyone. But we will be talking about what's going on in Iran and implications on that. So let's start there, guys, because you both have very unique perspective to the region, as well as having amazing business perspective. So Michael, you grew up in Kuwait, you said. What should we know about this region, and what should we know about business implications given your unique knowledge of the area?
Well, first of all, I grew up in Kuwait, like you said, all my life. It's an Arab country, but Persia, Iran was right across the thing. It was our basically annual vacation drawn to, so I know Iran pretty well. Tehran, Isfahan, which is one of the spots hit, is an ancient city. Google it. You'll just be astonished at the richness of the history going thousands of years. So 92 million people in Iran. We just think about them in nuclear terms and the Khomeini and Khamenei and all these people. This is an extraordinary country, extraordinary culture. So respect is a key piece of this puzzle. It often gets forgotten in this, and even in the Kuwait, because of the Arab, Persian, Shia, Sunni conflict and all of that, just geopolitics. So that's on one side. So I feel for those folks. It's a really weird time because they've been all oppressed by the regime. This potentially gives them a way out if there is regime change, as Israel is hinting at, other people are hinting at. Who knows? And the history of the Middle East is such that, especially in the last 20 years, when we've gotten our wish of regime change, let's say Saddam in Iraq, Gaddafi in Libya, it's not led to good things. It's led to bad things for those people. So it's just chopping the head off is not necessarily the only solution. It's the beginning of a crazy volatile journey. So there's a lot of uncertainty, all of that. My other, from a business point of view, I would say, what's interesting about this one is, regardless of the political reasons you would come across in supporting, not supporting the bombing, etc., it's happened. This is literally Top Gun Mavericks, the plot. Two in the second movie. It is exactly the plot, basically, without the Tom Cruise part. And they did it. Militarily, it was just an extraordinary technical feat, B-2s and all that. Geopolitically, the issue here is, regardless of where people were, right, left, globally, pro-Trump on this, anti-Trump, pro-Netanyahu, anti-Trump, generally, many opposing sides are now of the view that if Iran does get put back in a box, it's generally a good thing for the world from a market's point of view, from politics point of view. Obviously, near-term issue is the Strait of Hormuz, because the parliament in Iran just said, oh yeah, we'll greenlight attacks at so if there is that, then this escalates. The counter to that is China gets 40% of its energy from Iran, and they're going to be really focused on making sure the Iranian government doesn't escalate that, because they're a hostage if especially at a time when they're facing tariffs, etc. This is not something that they would like to see. So that's those are the near-term uncertainties from a market point of view, which is why I think the market's shrugging it off. Shay?
Yeah, I mean, it's an accurate point of view. I also, before I begin, I do want to call out, this is probably one of the worst parts of this job, where we kind of have to map out market outcomes onto human tragedy. A lot of times, online on FinTwit over the weekend, you just saw people talk about these variables in a model, but those variables are actual human lives. So it's a tricky conversation. So I want to just reiterate, this is not something that anyone enjoys, but it's part of the game. So commentary on my end on this, where I don't think it was an escalation as many feared it would communicate it would be over the weekend, because it was very targeted. The goal was just to remove the most dangerous variable from the equation on Iran. It was just these nuclear facilities. And I do think that when I saw that news, my first thought was, I think the left tail risk now is completely off the table. Not the violence, not the pain, but the unthinkable, which is the nukes. If they truly targeted these nuclear facilities and it damaged them in a matter of months, maybe even longer, on their ability to create these nuclear devices, I do think that's something the market would view as a net positive. And I think that's why you're seeing them kind of flat pre-markets, because of we don't have to be worried about potential escalation, and that's something that's a net positive on clarity for the market. But I do think our foundation is still shaky. I don't think that there is this is over. I think that we're probably the closest we've ever been to World War III. And I don't know, it's not rhetoric. It's just China's put in the corner right now. Iran is essentially the closest it's been in quite a while for a regime change. Those two powerhouses make sense on how much they rely on each other to pair up, and who knows what Russia is going to do now. I won't say fortunate again because human lives, but Russia's got their plate full for Ukraine, so their political military power is already used up, where maybe they don't have the luxury of joining China or US. But either way, I just think that this is something that is not over yet, and it's something to monitor. But Michael, I'll pass to you because you have something to say.
No, I thank you. I just wanted to, because you mentioned Russia and Ukraine, there's a second and third level effect here, which is that this really puts Putin on the back foot, because he was getting massive assistance from Iran on the drones or on rockets, etc., which is now all relatively off the table, one would imagine, because Iran is nursing what they have to figure out what they need to do. So this is a big geopolitical positive for Ukraine, which has not been, ironically, an ambition for the administration. In fact, after the last drone thing, Trump went out of his way to take drone defense systems away from Ukraine after the big Ukraine success against Russia with those lorries and trucks and so on. Literally a couple of days after that, Trump took those drone assets and moved them to the U.S. military. So Trump is still playing a very pro-Putin game, but it's ironic that he had to do two opposing things at the same time. Go after Iran on this thing, knowing that it weakens his the one ally that he really wants to support. Because Putin literally this cuts off most of his drone supply. The non-fiber drones. There are two types of drones. I can get into the weeds here, but there's fiber drones and non-fiber drones. And the fiber drones Putin has gotten from China, a couple of factories that Ukraine's been attacking. But from a Ukraine point of view, this was a huge positive, because it takes about half the drones off the field potentially, because Iran is gone, and it takes a lot of the rockets off, the Shahid rockets and so Ukraine. This is a big positive for Ukraine, which has implications for how the EU comes in and helps Ukraine, because that's the other thing that's been going on in the background is Germany and France have been ramping up to help Ukraine some more, and this enables them to accelerate some of those things, and it puts Putin on the back foot in a big way.
Also, one last comment before we move on to the next topic. the Persian people have been wanting a regime change for quite a while. Like,
Oh
this
my
is
God,
not a
yes.
quantities game. Like, this is just specific decision makers are in a position where, like, doesn't matter how many Persians want a regime change, like, it's not going to happen. So if there is some kind of regime change, I don't think there's going to be a mass rebellion towards
No.
the West. Like, I think it would actually kind of be a net positive for a lot of Persians.
Agreed. The only thing is, if this escalates to more tit for tat attacks, U.S. and Iran, then what happens typically, and we've seen it in other wars, etc., the people who have been oppressed end up coming to support the oppressors in their own country because now it's an attack on their country. So there's a very fine line, right? Right now, there's hope that this is contained from the Iranian people's side, and yes, they've been trying to overthrow the regime. We may forget how women turned up. You can Google it a few years ago in Iran, and they had their own Tahrir Square moment, like Egypt did, etc. They all got crushed. They disappeared from the face of the earth. They had their own Tiananmen Square in Iran several times. So yes, they want the regime gone, but if the world if this turns into a little bit of a local shooting war, it solidifies the patriotism of the country, and these are all fluid things that we don't know where they will go, and it's all 50-50, and something very, very serious to watch.
Yeah, and add all the freaking tariff wars. Like, this is such a crazy time we're in right now. Like,
we haven't even touched on tariffs because everyone thinks, by the way, tariffs are off the table. No one's paying attention. It's the single biggest thing I'm worried about. No, I'm in Texas, and on the news around here is basically the construction industry is gone, and from a tariff point of view, and supply of immigrants, the farms, etc. in California, they've lost half their workforce, and so we were worried about price of eggs. Price of lettuce is and eggplants are literally going to go through the roof over the next 3 to 6 months, and it's not in the markets.
Ugh.
We could stay on this one for the whole show, but I do want to stick on it for a bit because you mentioned the Strait of Hormuz, and I just want to contextualize that for people. Yeah. And Michael, you made an interesting comment about China, and sometimes when these things happen, my brain goes to almost like the second, third order impacts, like you laid out. Like, there's the immediate, okay, oil prices, but with China, what leverage do they have in this situation? Or is there any commentary on what they might do to make sure they're able to use that trade route?
So obviously they don't have naval assets like the US has. US has 3 carrier groups in the region out of our 11. China has barely 1. So this is not a military assets thing. They have jawboning, they have diplomacy, they're permanent member of the Security Council, they have huge diplomatic heft, so they can totally bring that in. What's been interesting is, Katie, they've not been. They other than making general offers of being an intermediary to dial everything down that you'd expect, they have not come to the aid of the regime military. Yes, there have been reports of some plane flights with some equipment and so on and so forth, and that I would expect because China's been doing that both with Russia and I would presume with Iran on this stuff. But in terms of what your question, Strait of Hormuz, no, they are really, I'm sure, behind the scenes and in front of the scenes, very focused on making sure there's no even a small shooting war in the Strait of Hormuz. Because again, as I said, 30-40% of their oil supplies come through there. And it obviously also affects the rest of the world as well. You remember when the Houthis shut off the other side of the Horn in terms of the shipping. Shipping had to go around Africa. This is a huge issue, and so for now, it totally feels like the Chinese government is going to be very focused on making sure that the Iranians, through all the pressure levers they have, does not turn it into a shooting war. And the Iranian government may feel the need to kind of do a couple of blockades and so on for a few days in the Hormuz, and that would spike up oil prices. But I would be fully expecting the Chinese to step in and say, okay, you had your 1 or 2 days, you've got your news flashes for your local media, now take the gas off, let the ships go. So the key part, though, is the U.S. shouldn't overreact, right? and temper this, because and then the other aspect is they may, the Iranians may want to have a couple of drone fleets come and hit some of our bases. They're right around the water. I mean, the one thing people forget, the Strait of Hormuz, at its narrowest point, it's only a few miles apart. I mean, Iran is like literally your backyard. When we grew up in the Gulf, etc. It's not there. These are not huge distances, and people forget that. And there's so much shipping activity in a very small, dense zone, and so yeah, there is a risk of any one ship captain on any side doing an emotional thing, and it becomes a little bit bigger thing. The one thing I'll just point out, and I'll shut up. There is a key Iranian facility which controls 30-40% of their ability to ship in and out, and China absolutely wants to protect that. They don't want that attacked, and that'll be one of the first targets if this escalates into the next level. Israel or US would want to attack that to really cripple Iran's economic capabilities. If that happens, that's very bad for China, because that would shut down port activity on the Iranian side that actually shuttles a lot of the oil they need. And so they're going to try very hard to make sure that does not happen. It's a very important thing for them.
I mean, there's going to be a lot of derivatives of the escalation, but there's going to be one common denominator. Gas and oil will rise prices, and that's going to cause CPI to rise, and there's going to cause a misleading narrative of reacceleration on inflation. It's probably going to force the hand on the Fed of like no rate cuts until this thing's over with. And I think that's something that market's not pricing in, where I think we're still pricing in 2 rate cuts this year. I've been on the camp of we should have done it already. If we haven't done it already, it's not going to happen, because a new variable has to come to light to make the Fed actually cut rates. And that new variable is something that has to break, and we haven't seen that yet. Maybe, unfortunately, that oil and gas prices going up eventually will be the thing that breaks something, and they're going to force the hand. But either way, like, I just don't think it's going to happen. And I think that's something the market's like a little too optimistic about. It's still going to have rate cuts.
Yeah, we've also talked a lot on this show, just like resiliency among investors and how there's so many things going on at once. You just kind of get used to the chaos, and there's like a new normal, which is interesting in context of everything that's going on right now. Jerome Powell is delivering his semi-annual testimony to Congress this week, and we have new inflation data coming. So I think it's going to be interesting, as Shay mentioned, like in the context of what's going on right now and how that changes. Shay, I want to go over to your new age of defense thesis and impacts of what's going on that. I know you shared out some, again, like growth stocks in light of what's going on. We're not trying to be callous. We're looking at the situation as it is what it is. Can you shed some light on these growth opportunities as the geopolitical landscape continues to get a little dicier?
Yeah, I mean, unfortunately, the defense is going to increase going forward, and it's going to increase in non-traditional ways, because the battles of tomorrow won't be decided about who has the greatest fighter jet, even though it was incredible seeing our jets go from Missouri to Iran in 37 straight hours. That's wild to me, that you can be somewhere in that small little room section for that long. But great, it was kudos. But I don't think the battles of tomorrow will be on who has the most advanced jets, missiles, tanks, largest aircraft carriers. It's going to be who dictates the digital battlefield. I think there's going to be cyber attacks in Iran. There's going to be attempted cyber attacks on the West. Like this, like the Pentagon knows this. The DoD knows this. Like they're rewriting entire doctrines of warfare now, because we're moving away from the world of hardware driven supremacy on defense, to one where AI, cyber dominance, real-time intelligence, drones, they're going to be the ones who dictate who's going to win this new age of war. And I think that there's not as many names available in the public markets that are clear disruptors in these sectors that are going to have a ton of runway. Like Palantir is a great example. I think Palantir is green this morning, significantly up 2%. Like I think, unfortunately, as geopolitical tensions rise, that's a net positive for them because they're embedding themselves into the core operational framework of the U.S. military and intelligence agencies. And they truly are the operating system of AI where they dictate how modern warfare is analyzed, executed, and won. Like, I wouldn't be surprised if Palantir is somehow included in the attack in Iran because they are aiding Israel. So I think that that's a name. Another one is, I mean, cybersecurity. Like CrowdStrike is going to be a major beneficiary. Palo Alto, Zscaler, Rubrik. I think that's. Then you also have names like Axon. Like Axon's very domestic, but their application can easily go international, and that's what something that really is underpriced because everyone knows them as a security camera on their cop's chest, but really it's a cloud ecosystem because you have to store all that data, the data from those cameras into their cloud ecosystem, and essentially they're becoming the control center of public safety. And I think that things are continuing to get escalated. That's going to be even more essential to have the guardrails in some sort, like a control center. And I think that if Axon's product is in that much demand domestically, why not internationally? Like nobody else has a competing product like that or with the whole infrastructure. So I think they have a lot of international runway, and I think that drones is a massive tailwind for them that people aren't truly pricing in, and maybe they are because it's a very expensive stock, and this is one showing relative strength as well. And then Cloudflare, 20% of the internet is essentially going through Cloudflare, and they're building through their workers program the new AWS of the modern internet, in my opinion. And I think that's going to be even more important going forward. So yeah, I mean, there's a lot of angles on capitalizing on the defense theme, where I think that's it's a combination of being offensive because AI is a huge tailwind for them, but it's also defensive because if things escalate geopolitically, they're going to benefit as well. So it's like a win-win. Michael, I'm curious to your thoughts on that.
No, I think that's a great list in terms of the front and center, frontline companies that are beneficiary both on the defense and the cybersecurity side. But recognize also that there's also been a sea change in terms of Silicon Valley toward defense. The Mag 7s are now leaning in to the defense opportunity as well. So let's not forget Google, Meta, OpenAI just signed a DoD thing. They're also all leaning into this. So they're all parts of the puzzle. Now, as public investors, we don't necessarily think about those companies as well as far as this opportunity is concerned. But what I'm saying is this is not a zero-sum game. This is such a big field because when you talk about $1 trillion annual defense budget of the US, let's say it's 800, 900 billion in any given year, the reality is from a technical point of view, and anyone who looks at it from a bottom-up point of view knows that we can basically have the bang for the buck of the 800 billion for half that. If we were somehow able to wield a magic wand and move all of make the aircraft carriers, all these amazing drones, sea drones, drone submarines, drone soldiers, all that stuff. If we could do that, that theoretically would, on a more sustained basis, would be half the budget for probably the same impact we have, potentially more. And so there is a not a peace dividend, but a military dividend in technology here that is not being thought through. When Anduril, which is, we talk about Palantir, Anduril is the other big private company, Palmer Luckey's company, and they're going out to replace Lockheed. They're not going to replace Lockheed. Lockheed's going to do Lockheed things. Palantir, Anduril is going to create all these amazing fleets of rockets and so that are all automated, AI driven, etc. Everything has to be redone. It's like, the Crazy Eddie ad, everything has to go. All the military equipment is about to be redone over the next 10 years. So there's massive opportunity beyond the specialist companies on the private and public side. There's just everyone has a lot of things to do.
The refresh cycle is very real. Like, I think people are underestimating that. I think the latest figure in 2024 is $997 billion in defense spend. I'm just going to say a trill. It's a trill. That's growing exactly. That's growing at 5% a year. So every year, 50 billion incrementally is added onto the defense budget. Let's just say 10% of that is going to start getting reallocated to the new age of defense. We're talking 100 to 120 billion dollars a year. That's massive. So I think that's what Michael's getting at, where it doesn't have to be replacing. It has to be incrementally added dollars, and that's enough.
I remember that, I forget the exact numbers, but 20-30% of the budget is people. So if we can replace more people with electronics, drones, submarines, robotic soldiers, robotic dogs, whatever, the real cost of defense is not the soldiers that you hire today. It's their benefits going on for the rest of their lives. And that's why the budgets, or the military budgets we're talking about, a third to half of that theoretically over a lifetime of 30, 40 decades is on the people side. So that's one thing that starts to come off if we automate the stuff a lot more with better AI and so on. The second part of it is that you can always assume that 20-30% of that budget is going to stay there, despite it making sense to change it with technology. Why? Because it's political. Because all those factories for planes and submarines and rockets and bases are in key states where two senators from each of the 50 states fight to the death to make sure that their military contracts and bases stay in those states, and so you're not going to be able to change a lot of that stuff. So yes, the benefit that we see, Shay, it's going to happen, but it'll be slow. So it'll still have the 3, 4, 5% growth because of the political part of it and the veterans part of it, the benefits part of it. But at the margin, we're getting more efficient, and that's the core thing. But remember, the other thing is, just like the US is going nuts about fighting China on AI, the rest of the world has not been spending this kind of money, and they can leapfrog the kinds of things we did. So as Europe is ramping up on their defense budget, they're going from 1-2% of their GDP to 3%. Well, guess what? They can go directly to all the new stuff, right? They don't have to replace some of the old stuff because they never had it. And same thing for China, same thing for Asia. Every country is realizing, post this nuclear thing with Iran, every country, and I counted at least 5, Turkey, Indonesia, there's 4 or 5, Egypt. There are a number of countries that are saying, oh my God, we better have nuclear, because if you don't have nuclear, we lose. Ukraine was one of the top 10 nuclear powers when the Soviet Union fell, and they gave it up because we said, oh, we'll protect you. And guess what? We didn't protect them. And so and Gaddafi, same thing. He didn't have the bad weapons. My point is, the world is rearming, and they're rearming with the more efficient stuff. So they're going to rearm with the big ones that can afford it will all do the nuclear thing. So the nuclear threat has gone up more, which is actually the ironic part of this. That there are going to be half a dozen countries that wouldn't have done nuclear. Even Germany is ramping up on nuclear military. And then the second thing is they can leapfrog the current way of doing military. A lot of these countries, and so they're going to be faster ahead of us. So if we want to keep up what we want to do, we better be smart, even smarter than them. So yes. So defense is a perennial investment allocation category, regardless of whether you're looking at it as a public investment or private investment. The next 5 to 10 years.
Shay, I want to ask, as you had the list up, I was thinking of like how, at a high level, your criteria for picking winners there. I saw we have AeroVironment reporting tomorrow, which is in the defense space. They weren't on there, but it made me curious how you think about who to add, who not to add. I know you added Archer just last week. What are you looking for outside of just the thematic alignment?
Moats. I think moats are really important. You guys hear me talking about moats all the time, like I'm Mr. Moat, but it's a real thing. Like, it creates a high barrier of entry for any competitor, and I think Archer is a really interesting component. They're like I want Anduril. That's like what I really want is Anduril. Like, I want to build like a 5% position in Anduril, but they're private. I think Archer is a really great adjacent play for Anduril because they're very buddies. They're paired up on a lot of deals. And I think that Archer right now at a $5 billion market cap, I think is very expensive. But the way things are heading towards on the new age defense spend, I'm like, I think it's going to be like the market grows so much, Archer's going to grow with it. And I think a lot of people are also viewing them as a flying taxi company, when I view them as a low altitude logistics platform because they have a very interesting software component to them that they can really sell that platformization angle. So again, going towards platform, I think that's the most important thing, where every company Every
Ooh, that was
company
a
and
big
like
one.
every company in like the agentic AI world we're about to enter, they have to be a platform or they're going to be replaced as the middleware. You don't want to be a middleware because that is where the AI summit hits. Cloudflare, monopoly. Nobody else does what they do, and if they truly become like that, you don't need a cloud type of thing, or they build their own AWS without the hyperscaler cloud. That's whoa moment. Palantir, nobody does what they do. They have a monopoly. CrowdStrike, cybersecurity is very, very competitive. There's a lot of people don't realize how many companies there are because most of them are private. But if I had to pick one name that's the closest to being the all-in-one cybersecurity platform, it has to be CrowdStrike because they have 9+ modules that are adopted from their customers. That shows optionality. That shows that they can constantly innovate to the latest and greatest. Where Palo Alto has 3 or 4. Palo Alto is a blue chip, great company in that field, but they've had to acquire their way to get to 3 to 4. They haven't proven to me the ability to organically grow, and they're relying on their blue chip staple customers. Either way, they're great. They're tier 1. I'm just saying CrowdStrike's, in my opinion, better because they can organically grow. Other names, Zscaler, SASE is so competitive. It's so competitive. I just don't think it can be a platform. It's more of a middleware, to be honest. Another one, SentinelOne, CrowdStrike problem. As CTO, you don't invest in the second best in that space. You invest in the best. That's CrowdStrike. And you don't want multiple vendors as a CTO. That's another thing you have to think about. Yeah. So again, to answer your question, long-winded, Katie, is moats, platformization, network effect, the ability to scale. Those semantic layers are really important to pick a company. You can't pick a company based on free cash flow margins, revenue growth, stuff like that. Like you have to dig deeper, especially in this super cycle we're in. That's only going to get more and more intense.
Yeah, I think you made 2 interesting points there that I hadn't thought about. Just the psychology of the buyer. One, yeah, in cybersecurity, you're not going to get the number 2. Like you're already going to blow all this money on it. And that's not something you're going to like wheel and deal and try to get a good deal. And I'm going to go to the competitor. They're giving me a cut. It's like, no. And then the second one, you're right on consolidation, tech consolidation. CTOs have hundreds of vendors. They don't want to add 3 more.
They want less meetings. They want less meetings.
That's a great point. And again, those are things that don't show up on the balance sheets. Michael, any thoughts to add there? I saw you nodding. Are you just nodding in agreement?
I was nodding in agreement. Shay lays it all out. The wrinkle I'll just spend because he mentioned Shay. You mentioned middleware. Middleware, it's box number 5 on my 6-block chart of AI tech stack, etc. Middleware has been thought as being one of the boring segments of software. And the one thing I'll just say from an AI perspective, I spent the weekend really digging into one of the hottest areas in AI, and I know this is away from cybersecurity and defense, is really AI coding. If you look at what OpenAI, Meta, Google are spending gazillions of dollars, when Meta's Zuckerberg is saying $100 million sign-up bonuses, he wants AI researchers to essentially redo the software tooling. The way we actually write the software is fundamentally changing. It's what we used to call middleware. And as I look at like the hottest companies, Apple was rumored to be buying Perplexity, etc. I don't think Apple should buy Perplexity. I think they should buy Cursor, which is about to do a $20 billion valuation because it's software middleman. It's AI coding tools. Why? OpenAI just bought Windsurf, which is a company that didn't exist 3 to 4 years ago, for $3 billion. And this is software tooling. This is basically for developers. These are products for developers to really use AI. And we've been thinking about them as, it makes the developer more productive. It's much more than that. It literally allows them to recreate the entire software stack. Just like, Shay is talking about the military stack has to be redone. The entire software stack for 70 years has to be redone. For that, we have to rethink how software is done. So some of the hottest companies are going to be both on the private side, like Windsurf and Cursor, but there's a ton of public companies as well that will have an opportunity in the next year or two. So we could be on in a few weeks or months talking about just those public companies as well. So that middleware, I was just reacting to the middleware piece, the software tool piece. In my entire 30-year career, it was a boring area. it's a massive growth area going
Well,
forward.
do you
with
think
AI.
the middleware is super important because the on-device inference angle to it, where like you kind of have to be lightweight and open-weighted in a bit? Like I'm talking Mistral. Like Mistral is like really interesting to me on that, where it fits Apple's like hardware, like,
agreed,
mobile
no, I
first
understand.
thing.
No, I understand. I totally agree. It's just that the software industry for 70 years, it's multi-trillions of dollars of invested software. I mean, one of the hottest areas in software today in the middleware space are 2 or 3 startups that I'm tracking, and I just invest in one of them. Their core business is helping companies with huge COBOL stacks, which is, we barely have program into Python and AI. They're doing this AI software that converts that stuff. So my point is, it's full stack, Shay. It's not just the front end and the back end. You got to think the whole thing. The whole thing, the 6 boxes of the tech stack are getting redone. Everything's redone. We, as investors, we can't just think, oh, I just want to be in box number 6 over here because that's where the light application. No. Before we get to that, there'll be billions and tens of billions of value created from startups that literally, and I'm tracking, I know most of these guys, they were out of college 4 years ago. I knew many of them. They're all billionaires on paper today. I mean, Arvind was at HBS, he's a brilliant guy. And he was just at HBS about 2 weeks ago. He's got Perplexity, right? With 4 founders. And what I'm saying is the opportunity to redo every one of those pieces of stack, we're going to see over the next 2 or 3 years for nonstop, at least half a dozen companies that no one around this table has heard of, that are all going to be worth 5s and 10s and 20s of billions of dollars, because they're redo the software stack from the bottom all the way to the top. And all of that has big impact on a ton of public software companies. What we think of SaaS is getting redone, enterprise software. The big companies like Mark Benioff, Salesforce, they know this is coming, right? They're trying to position themselves. And so what I'm saying is that the opportunity set for investors is so open-ended. I have not seen it like this in 30 years of doing this. That's the good news. The bad news is that the rules that we've used to invest in software and technology and hardware for the last 30 years, almost all of them throw them out the window. They don't apply. Why? Because the economics, the business models of all these companies and interactions are fundamentally changing. So the whole world has become startup on software. It's just, and that applies to the military piece that we were talking about earlier and the cybersecurity piece. So it's good we started there, but it just applies to the whole thing. That's why I was shaking my head at the middleware part of the discussion.
Michael, I feel like I would read an entire blog post from you on the to from of like SaaS metrics to be looking at in light of what's changing, like as an investor, how things are moving. And you're right. I saw, this is not at the enterprise level. Wix last week acquired this company Base 44 that does vibe coding.
So it's got the buzzword of vibe coding. What that happened, this is in a great story, Katie, thank you for pointing it out. Israeli entrepreneur, literally 2 or 3 years. I know, I don't know him. I know a couple of investors who were part of that thing. And yeah, it was a company of maybe 8 people. They got an $80 million cash payment from Wix. $80 million. 25 of that goes to his 6 or 7 employees. The other goes to him. So great payday. He's in his 20s. Awesome. The thing is, I saw this exact same thing happen 30 years ago when the Mosaic browser was coming and so on. There were a bunch of companies. There's always going to be amazing entrepreneurs who will come up with a solution that fits, and that was a company made to sell to a Wix. Just like back, so, and at that time, when the heat is on, as the song goes, companies will pay what are massive numbers to get into the game. And Wix was a traditional company that's buying a full-on solution to do vibe coding that they can just add to their stack for their customers who want to create websites with AI. It was a brilliant solution. In 6 months, that software is going to be obsolete because there'll be 6 other companies that are doing it better. But Wix will hopefully have some product that they can sell and make 300 million and recoup their investment. In the meantime, the kid gets a great outcome. There's going to be a ton more of this.
There's a lot of private companies building, like Lovable's huge. There's Create. There's so many.
Totally.
I appreciate the Glenn Fry reference as well. You don't often get a Glenn Fry reference on this show. Are you a big Eagles fan? Or
I love the Eagles.
I
Love the
love the
Eagles.
Eagles
Every
too.
concert.
I'll
Totally.
defend him to the death. Don Henley forever and
I'll,
ever.
I'll be at the concert even if they're like 95 years old doing their thing.
Same. They can still let it rip. All right, letting it rip. Let's go with that.
So
Tesla.
sorry, I was looking at this price action before. Hims is down 30% almost right now.
Wait, it was just like 15.
No, it's accelerating. I'm watching it right. That's why I was like, what's happening? That's like,
you tweeted about it, right, Shay? There's the
it was a Novo Nordisk. Yeah, they removed their partnership. Like, it's not a 30% move. It's
such a volatile stock.
This is the most volatile stock out there. I don't understand why it's so volatile, but like, I do think that, again, this was not a surprise. I think there were some like signs out there that their partnership was a bit shaky, and a lot of the revenue isn't dictated on Novo Nordisk. Like, they make a lot of money without them. I don't know like why everyone's shocked why there's a down 30% move. It doesn't make sense to me. And even though like I'm a long-term bearish on the telehealth space, like I think it's just that's one of those areas with commodity. Bigger players will just eat up the sharks will eat up the guppies, but Hims is clearly doing its thing where they're maybe for Hims, it's like the Netflix thing where Netflix was the first mover disruptor in a space that's clearly a commodity in streaming, but they took that first mover advantage and cemented themselves into permanence. Maybe that's Hims becoming that Netflix of telehealth, but 30% move is really interesting. I'm trying to see where it would be a balance.
I was gonna say, is there any indication if it's institutional or retail? Because I know they're like a third retail investors about. They have a very high concentration relative to other stocks. So
well, you have to think, they were up like 160% this year. So I think a lot of it is.
Look at that.
Yeah, that's a pretty nasty. Go to the day, Ryan. Let's see. 29. Yeah. Oh my God. It's brutal. So where would the bounce be? I'm looking at the chart right now. They sliced through a 50-day moving average of 48 with no resistance. Wow, it might go to $34. That's a 200-day moving average.
Wow.
Let me see their anchored VWAP from their breakouts that happened in November 2022. Yeah, 32 to $34. I think that's a good low 30s is a really interesting range for a Hims. But yeah, 50-day chart. That's they might be looking at the weekly. Yeah. It's also in an air pocket. Do you see this air pocket it's in? Like volume shelves above, volume shelf is below. That's where I feel like the magnet, the volume shelf below, it's probably going to hit that. And that's where maybe there's a bounce. But I don't know. You have to be a big believer to be in Hims for how volatile it is. Like it's nuts, the 30% move. And even today, like the market's green, but it's interesting. A lot of speculative small cap names are getting destroyed. IonQ is down 6%. 10%. Tempest is down 6%. Archer's down 4%. Hims is down 30%. Like there's an interesting rotation. I wonder if people are just going towards Mag 7, which was the theme in 2024. I'm pretty sure where they were just like the flight to safety. But I don't know. Do you have any thoughts on Hims, Michael? I'm curious.
On Hims, not particularly, other than the broader space in telehealth. It's a tough market. Again, a lot of the reasons are just inertia, corporate, just people changing habits, etc. It's a place where we need a huge amount of efficiencies, but for a whole bunch of reasons doesn't happen. The US spends 20% of its GDP on healthcare. We should be 10%, which is what every developed country is. But for whole reasons, we don't do that. The Hims, the telehealth space has been one of those things. Amazon is a huge investor in this now with One Medical and the online pharmacy stuff, etc. The direct-to-consumer model has been a big piece. But the problem is until we untwine the payment system for healthcare from corporations, our employers, etc., and all the insurance stuff, and that's a huge political hot potato, as we know, with Medicaid and so on. This is a slow-moving set of aircraft carriers that will change. And yes, there are going to be opportunities for startups in this space and companies like this in space, but by definition, more volatile, which is what I think you're talking about for Hims today.
I think retail has chosen their two names for healthcare, and it's Hims and Oscars. And I think that's a really interesting angle because one's democratizing privacy, which is what Hims' whole thing is. The other one's democratizing the whole healthcare space, where it's about patient first experiences, which unfortunately has not been the thing. So I think it's interesting to monitor those things because healthcare is such a dinosaur of an industry. They know what's going to be disruptive, but the red tape bureaucracy to actually change something is in a matter of years, not months. Even if you're going all in on pivoting, it's years. So
Correct.
it's interesting. It's an interesting space to monitor.
That's what my question was going to be, because I'm looking at the Stocktwits comments, and on the Hims page, people are saying we're all going to Oscar. So like that got me thinking of like, is it a flight to safety or is it a flight to the next flavor of the week? And Oscar's up 22% in the last 5 days. Or people like old news, they're on to the next, Leo DiCaprio
That's
move.
what scares me. That's a near-term top, because there's a lot of just like blind buying a bit where yes, they're both in healthcare, telehealth, and the other one's completely different. That's very Medicare Advantage focused. That's very policy driven. But people are just like, oh, I'll go to the next hot thing. That's blind. That's just totally blind of buying. And that's usually where things are a little not bubbly. It's just a little inflated a bit. That needs to be
more
popped.
dynamic.
Yeah, I gotta dig into Oscar more. I was a customer a few years ago, and then I realized it's just a pretty UX wrapper on existing healthcare programs. So, I mean, it was a necessary thing. It was way better to use them, but it was really just a wrapper on something else that existed. So I'm like, is this just like a web design shop? At the end of the day.
If you're into Oscar, I dug into it. I also worked in the healthcare space for quite a while. Like, it's truly, if you're getting into Oscar right now, it's very cheap. It's very undervalued, but there's a reason for that, because it's very exposed to policy, and policy can flip like this. And there's lack of a moat because they can't control a lot of their outcomes. But if you really do believe that the world is heading towards health insurance putting patients first, like this should be treated as a call option for that future. And I think that it's such an irrational system, healthcare in America, that if there is a rational actor, which is what Oscar is, I think that's a win for everyone. So I think there's kind of a story stock where like, if this rational actor wins and disrupts something, I don't think it'll ever become United Healthcare. I think I've seen some commentary like they're going to be the next UNH. I'm sorry, just no. Like, you have no idea what Optum is under UNH. Like, there's so many different elements of UNH, but I still think that this could maybe be a $25-50 billion company if they prove they are disruptive in this irrational system. That's the angle. But I think it's going to be a slow compounder. It's not going to be like a Palantir or Robinhood type of like massive moves. It's going to be like 15-20% compounding actor every single year if they prove it slow and steady. And it's crazy. Retail's just, that's not satisfying enough to make 15 to 20% a year. And that's what's scary to me, because my goal is literally I made to the GOAT status if I make 15% a year in my portfolio. GOAT status. And the last 3 years, people are just like accustomed to, I made 67% last year, and I was like, that's it? Like, I have so many people made 100%. Like, you made 67%. Like, you're doing something off. Like, that's what's like wild now in this time.
I mean, and Oscar's still below its IPO price. It was at 31, and then it dropped all the way down below 3. So it's been on a journey. I know we have a few more topics we want to get to quickly before we end, so maybe we'll do a bit of a lightning round. But I want to go back to something we were talking about with the perplexity conversation and Apple. And Shay, you had a post up about Apple's AI ambitions. The last time you guys were on, we had a fun little back and forth on that topic. But Shay, talk to us about this take, what led to it, and what you think the implications are.
It's because this is so not in Apple's wheelhouse. If these, let's just say this is from a Bloomberg article on 5 potential M&A targets that are rumored for Apple. I think that this is really encouraging to see because, again, everything they've been doing has been quite defensive in the AI era. Like they've just been putting a lipstick on top of their existing infrastructure. Like, oh, from the iPhone to AirPods to App Store. Like, I mean, iPod, Macs, like they're just like, it's not much. It's just dusting off features across the OS and putting an AI feature into it. It's not really that much of a whoa moment. It's not like Microsoft's collapsing a whole productivity stack into Copilot, or Google's doing the same thing with Gemini. Meta's doing really great things, like, and they're rushing, offering 100 mil for each talented engineer that they find. But I think that Apple is really going towards something that's more foundational and owning the infrastructure, the data stack. And I think like names like Perplexity, I think is clearly the search model disruption. Like maybe they replace Google with their Perplexity product, they acquire them. Like, I don't think that's going to happen, but I think that maybe that's interesting, at least being aggressive, because they spent $10 billion on an Apple car that did not do anything. Why not spend 15 bill on Perplexity that will instantly get you to the race, and you can figure out where do you want to go from there on the consumer AI angle. But I think Apple's never built a data stack. They've owned privacy within their current infrastructure, but they really haven't owned the data stack, and they never wanted to build that. And I think that as we move away from on device towards like system-wide cognition through AI agents, like I do think that that's something that they should be able to capitalize on, because the old stack is dying. I know Michael agrees with that, and there's going to be new components to that in this agentic AI world, and owning the data infrastructure, the backbone, like, is really important. And I think Perplexity maybe is like, it's too expensive. Maybe there's a bidding war. They have to like overpay. I get that. But Mistral is an interesting one for me, where I don't think they have to pay an arm and a leg to get it. Databricks is there's no way that's happening, because that's going to have to be a 60 bill at least, maybe even higher acquisition. And that's not even close to anything Apple's ever communicated they wanted to do, as being a data lake across the. It's just so not hardware or consumer oriented that it's just like, no way. But if they do, I don't know. I feel like a Snowflake would be in trouble a bit. I'm not gonna lie. That duopoly would be a little dangerous. But yeah, I just think that, again, this is something that Apple's never done. And I think if they actually go down this path, it proves to me that they are taking it very seriously and have to be very aggressive. And this on top of Zuck's comments about what he's $15 billion acquisition for Scale AI, which in my opinion was a talent grab to get Alexander Wang, and spending 100 million per. You sense the urgency for these Max 7 names, because Jensen just a couple weeks ago said there's $100 trillion that will be spent on AI infrastructure. 100 trillion. So all these like massive price tags right now is pretty minimal for the long pie of 100 trillion, if you have to think about it that way. So yeah,
I don't know.
Talking
about defense at a trill. So
yeah,
100x.
exactly. They're redoing the whole world. That's what AI is doing.
Yeah.
AI, again, is intelligence. Everything in this world is intelligence related, adjacent. But Michael,
but not today's AI. Tomorrow's AI that has to be built.
Yeah.
I just want to make sure it's very easy to think that judge everything by just the AI we've seen in the last 20 years in terms of machine learning, deep learning, and the 3 years with ChatGPT. Everything, the excitement that Jensen is talking about is about the AI stuff that has to be built. Yes, it's a multi tens of trillion, $100 trillion opportunity. I agree with that, over a 10, 20 plus year period. So that's a big opportunity set. In terms of coming to this, so I agree with that. It's just that recognize that this is a long-term scenario, and there's what I said earlier. Everything in the tech stack, from the hardware to the software to the applications, is going to have to get redone. It won't be redone overnight. It will take a lot longer than we all think, and even the companies think. And Zuckerberg knows he's paying 100 million for something for the researcher, and he'll, 90% of that will be wasted. But he needs to do it just to get other people to come in. He needs the engineers to kind of be there, and that's what he's trying to do. But coming back to Apple, I did a post yesterday. It goes into details, Apple's history of build versus buy, and Apple typically has built, they have not bought, and the market always hates that. And for the most part, they've done well of it. Yes, they lost 10 billion on the auto experiment, but other companies lost multiples of that. We don't forget, Meta is such a profitable company. They've lost almost 100 billion. Let me just rephrase, 100 billion on the metaverse, on artificial reality VR. We don't think of that because they make so much free cash flow, it's buried and all sins are forgiven. Okay, so the efficiency piece is very important. Apple, the largest acquisition that the Bloomberg article talks about that they made was in 2014, a company called Beats, the Beats headwear software. Okay, $3 billion. Okay, if you do the math, I went and did the math yesterday, that was less than 0.5% of the market cap of Apple back then, which was around $650 billion. If you took 0.5% of Apple's $3 trillion market cap today, it would be $14-15 billion, which, by the way, is about what they would have to spend on Perplexity if they bought it. Of the 4 names that you talk about, that is probably the most logical one. And I said in my post, yeah, I can see the arguments, the pros to do this. Remember, this was my professional job at Goldman Sachs, helping these companies figure out build versus buy, mergers and acquisition, all that. So Perplexity, I can see the argument for it, but I can see a lot of argument for Apple because I know this company from its Steve Jobs days. They don't do well with outsiders coming in and building them in. JG, who's their AI head, they got from Google, and he is getting the blame for the Siri failures. There's a cultural element to Apple. And one of the biggest things in companies you got to understand is the culture. It's not the numbers. It's not, oh, we can afford. Yeah, so Apple, Perplexity, it's $500 billion. If they bought any one of these other companies you mentioned, it's less than a percentage of their market cap. So even if it's 60, 70, 80, even if they bought OpenAI, which was talked about in here, it would be a pittance, relatively speaking.
Why wouldn't they do like a Microsoft type deal, buy 50% per Perplexity?
They don't need to do it. No, I would not. That's not their culture because they need to own the full stack. This is Microsoft. That is just not the way this company works. And when you say, okay, Microsoft did a $70 billion acquisition of Activision, one of the biggest ever. Yeah. Okay, they're playing in the gaming space, which is an adjacent space for Microsoft. Apple has nothing to do with it. They're actually one of the biggest purveyors of games on the planet. Almost $1 trillion of gaming, about $600-700 billion of gaming revenue is going through Apple, through the Apple App Store. We're showing it. It's showing up in their services revenue, which is now touching $100 billion this year. That's great high margin revenue. This is why Apple became the most successful investment for Warren Buffett on the eve of his retirement. Yeah. Okay. Because they don't need to do stupid shit. I'm sorry. The other companies do. Apple does not need to do that. We keep forgetting. Apple has the most ungodly ecosystem of hardware and software on the planet. We keep saying, they don't need the iOS because all this magic agent stuff is going to basically do everything. Nuh-uh. The middleware has to be redone. Perplexity cannot do anything that they really want to do without touching the hardware and software. That's why if you think about Perplexity right now, Arvind will say, the CEO, the founder, will say, oh no, Apple needs us more than we need them. That's a negotiating tactic. I would say Arvind better sell because he has no avenue. He has no avenue to really do what he has to do, which is go up against Google. He cannot do it. Okay, I love Perplexity. I use it every day. I'm a huge proponent. But he needs to make the best deal he can over the next couple of years. I have been there for when Yahoo bid for Facebook, when Yahoo bid for Google, and they had a deal almost Yahoo almost bought Google for $1 billion at one point. I remember being in the room and saying, guys, you're negotiating for 10%, and this is not there are acquisitions that make sense. These are not acquisitions that make sense for Apple. Apple does not need Databricks. I agree with you. Remember, when Meta bought half of Scale AI, just to get Alexander Wang, who's the 28-year-old founder, to head up their super AI thing, it crumbled Scale's business. Because
Google
it's
left.
A vendor.
Yeah, it's like
it's a vendor. It was doing the data work for Google, for Microsoft, everybody. That's evaporated. All of them are going to this company called Surge and Mercor. Those guys are becoming billionaires. We don't read about them because they're not hot news on the Wall Street Journal. But those kids have become billionaires just in the last few weeks because of all this. What I'm saying is, no, Apple doesn't need these 4 names that you have in this article. Databricks, no. Mistral, yeah, could be, but they don't need it because the whole world's going open source. Just in the next few weeks, OpenAI is going to announce an open source version of their software. Apple can cut a deal. They don't need Mistral, which is open source.
You're right.
They do not need Mistral. Open source. If you look at Apple, I'll have a post in the next couple of days about Apple's building a small AI model called OpenELM, which is in their devices that they announced at WWDC. Open source, the world's going open source. All the major LLMs in China are open source. Alibaba went from closed source to open source with Qwen. Apple doesn't need large language models the way we think about it today. They don't need it. People need to understand, but people won't understand because this is such a complicated 3D. I had a graphic in my post that this is a multiple level of chess games that are going on.
We need
Apple
a
doesn't need
special
Mistral.
episode that's like, what's up with Apple? And we guys go nuts.
I'm just telling you, they don't need Cohere, which is on this list.
Okay.
No, if anything, Apple, the only thing, Katie, sorry to interrupt, but I just want the core thing that's going on is that they need the middleware stuff that Shay was talking about. I would be more intrigued by if they bought Cursor or if they bought some of these coding software companies because to redo their stack. But they don't need that because guess what? When those companies are trading at 10, 20, 30 billion, over 2/3 of Y Combinator, which is the next generation of startups in Silicon Valley, they're all AI coding companies. Apple's going to have the pick of the litter. It's a pick of the litter. So you don't need to do this. And the core thing for Apple, Katie, I just want to say, and Shay, the cultural thing at Apple is very important. Whether you hate it or love it, it is what it is. Until Tim Cook leaves, you can't change it. Yes, Apple could do one of these complex deals, etc. But I used to be in those boardrooms with them. That is not in their DNA. My bankers would tell me, no, forget it. We're not even going to get it in the boardroom, much less pitch that. It doesn't work. Yes, it works in the Microsoft boardroom. Yes, it works in a lot of other boardrooms. Those are different animals. Okay, we're trying to compare an elephant to a rhinoceros. These are different creatures, and that's all my point is. Apple, yes, there's a lot of options. I can see the pros and cons. I think Apple's better on the build. And the last thing I'll say on the Apple Perplexity thing, I said, yeah, they could build or buy, but they're going to bank because what they're really going to do is going to expand their deal with Google. They're making $20 billion a year to be the default search provider for Google. Sundar Pichai for Google has literally said, I want Apple to include Gemini AI in the search deal. For that, he's going to pay more. So that 20 billion could be 30 to 40 billion. So instead of spending 20 billion on Perplexity, they could be making 20 to 30 to 40 billion a year for the next 2 or 3 years while this industry grows up, while the AI software of tomorrow actually gets built. Okay, and then buy it. So that's why this business of Apple's too late, I couldn't disagree more. The world is coming to them. They just have to wait at the right point on the train tracks to get on the train. This is not as crazy as the street seems to think. I disagree with that. Get that. If you're a public investor in this thing, rip that out of your head. If you have doubts, ping us, ping me. I will walk you through it.
Reach out to Michael. We have to do a continuation.
Not going to happen.
I do want to ask you guys what we're over, but I did want to ask you guys one rapid fire question. News broke when we were off, I think Wednesday, maybe it was later in the week. X getting into stock trading potentially.
Oh,
would you guys trade stocks on X or crypto or anything? Would you put money through it?
I made a post. I was like, worry about being a bouncer before you become a broker. Bounce all these bots away.
Love it.
These bots are killing me. You think I'm going to trust my money in this platform? And
the bots are so bad that when I post something, I get Shay's bots. Like that's how sophisticated they're. Like, oh, she's like tangentially, and she's like, oh, and it's like the fake you is like, hey, and I'm like, that's not Shay. Why are you here?
Let me flip the question to you guys. Elon has specifically said he wants to make X into a payment company, like PayPal. Let me ask you guys: would you trust your payments through X?
No.
If you like Venmo or something or Stripe, or would you do payments through X?
I don't think you need to because Stripe is so embedded into everything else. Like, why create another Stripe product? It's low margin. Like, I don't know. I wouldn't. I love X clearly, but if you have your, I don't trust their hand in my pocket. Let's just say that.
Yeah, this is the governance of it all. It's like, oh my god. If you're like an IR person, you're like, oh,
he has 6 people to handle spaces on X. Like, you think how many people are going to have monitor the payments? No way.
No, it's this business of the companies want to be everything when they grow up, but you got to figure out, what would consumers trust? So would we trust X in the would I trust Meta? I made this big thing on the show, a few weeks ago. I wouldn't trust. I love this gizmo. This is the Meta smart glasses. Meta just announced they just signed a deal. These are the smart glasses. Meta just announced a big deal with Oakley. These are the Ray-Bans. Oakley, that they're going to have by Christmas. There'll be 500, another 150 more than this.
Those are Oakleys?
These are Ray-Bans.
Oh, I was going to say,
no, Meta,
Oakley's changed.
Meta just announced these Oakley. You can get on the list because they're going to be hot. You can get their premier gold model for $500. It'll be July 15th, 16th. It's going to be available for pre-sale. Meta is all over this. They're selling 2 million of these so far. They'll sell another 1 million with the Oakleys. Apple is going to be in this space. My point is, I don't, this thing takes pictures and I trust Apple relatively. I trust Google. I don't trust Meta. Not because I don't trust them. It's just that their business model is adversarial to my interests. And I should, and that's the core thing we need to keep in mind. Which of these companies' models is on the other side of where we need to be? That's why Apple is another reason why Apple doesn't rush in and buy XYZ company, etc. They've got to build it their own way. Apple Pay, okay? Anyone talk about Apple Pay? But both of you use about probably 30 to 40% of the time you use Apple Pay today in America. That was a product that product didn't exist a few years ago. Yeah. And they did it in their Apple way. It's super secure. There's nothing like it technically in America. There's no credit card, there's no cyber security risk, etc. Extraordinary product, but they built it from the ground up. Apple will hire the best of the best people. They'll do acqui-hires. They don't need to buy the companies for the most part.
There you have it.
For the most part.
There
so
you
my
have
2
it.
cents.
Now we know the culture of Apple is strong and apparently not changing. Guys, I still have a list of 10 things we could have talked about, but we ran out of time. So, Michael, you have to come back.
We have to talk Tesla tomorrow morning. It's up 7%.
Oh my God, Tesla!
Okay.
I know, guys. Yeah. I gotta go. I gotta go to my day job.
I won't be there, but I just say Tesla robotaxi. It may spike the stock. I'm negative on the whole robotaxi for the next year or two, and I can come back and talk about that.
Leave a hot topic.
You gotta come back. You gotta come back. Tweet something out, Michael, that we can put a takeout that Shay can respond to tomorrow.
Okay. Okay.
All right, guys. Thanks so much. We are back 9 a.m. tomorrow on Tuesday with more market news and headlines. Thank you so much, Michael. Always good to see you. Thank you, Shay. See everyone tomorrow.
Lots of fun. Thank you.